This is your LMAX Exchange technical update for Thursday, May 4th, 2017. Euro dollar. So while the euro is looking constructive overall and could be poised for a next major upside extension into the 112 to 114 area, there is still risk for a short-term corrective pullback in search of a higher low before that bullish resumption. Look for that market that gapped open last Monday with a 200-point gap that still needs to be filled somewhat between the 107.30 to 108.20 area. And considering the bearish outside day that we saw on Wednesday, there is risk again for that pullback to can extend down towards the 107.30 area before the market considers a fresh upside extension. But overall, on a medium-term basis, there is signs of a meaningful base here as the market has broken out to fresh 2017 highs, and again opening the upside extension towards the 112 to 114 area further up. Only back below 105.70 would compromise the constructive outlook for the euro. Sterling dollar. Cable is doing a good job consolidating above previous resistance at 127.75, and while it consolidates above that level, it continues to strengthen the outlook for a meaningful base in this market off the plus 30-year low from back in October of 2016 at 118.40. This now opens the door for the next major upside extension towards a measured move in the 135 area following about a 700-point consolidation that we had seen for much of the fall of 2016 through to March of 2017 into this breakout that we saw finally into April. So again, there is risk now for a meaningful upside extension towards 135 over the coming days, but at the same time, if we do see pullbacks, which are very capable of happening, they should now be limited towards the 125 area. But again, those pullbacks can happen after the market had seen a nice breakout. The only difference now is that instead of the market being a sell on rallies after this major downtrend that we had seen, the break above 27.75 shifts the structure and now makes it more of a buy on dips in anticipation of a higher low and continuation towards 135. Dollar yen. So dollar yen is finally taken out and closed above key resistance at 112.20. This suggests that the market could be finally putting in a 2017 low at 108.13 in favor of a continuation of gains over the coming sessions. At the same time, while the break and close above 112.20 does take the immediate pressure off the downside, it certainly isn't all that constructive just yet, and we need to see a break back above 115.60 to achieve that goal. Right now, the break above 112.20 does take the pressure off the downside and shifts the market stance to a more neutral stance. Right now, if we see a break back below recent support at 111.95, let's just call it 112. If the market breaks back below 112, it will put the pressure back on the downside. Euro Swiss. So Euro Swiss has done a good job being well capped into rallies towards 109, where a meaningful lower top is sought out ahead of a resumption of declines. But at the same time, the market has really been stuck in a range between the 106s and 109s over the past several days. And while the market holds below those two, in between that area, there's no significant bias. Overall, the downtrend here is slightly intact, but we would need to see an eventual break below 106.24 to confirm and accelerate declines, while a close back above 109 would potentially open a shift in the structure, opening a more bullish structure. Aussie dollar. So Aussie continues to extend its decline since breaking down to fresh multi-day lows below some key support at 74.75, and this now opens the door for a renewed decline or an extension of declines down towards meaningful support at 71.60 further down. Any rally should be very well capped with only a break back above 76.11 to compromise the bearish outlook for Aussie dollar. Dollar CAD. So dollar CAD continues with its extension higher over the past few days. The market has broken up to 2017 highs and looks to be on track for a test of the next measured move extension in the 140 area. We have seen quite a move, so there is risk for a bit of a pullback, but any setbacks now should be ideally supported well ahead of 134, and only back below 132.24 would compromise the constructive outlook for dollar CAD. Kiwi dollar. So Kiwi remains very well capped into rallies, and the market is showing signs of wanting to break down and extending its run of fresh 2017 lows with a clear break below recent support at 68.62 to now expose a retest of next medium-term support at 66.76 further down. Any rallies here should be well capped with only a break back above 70.90 recent highs to compromise the bearish outlook for Kiwi dollar. SPX 500. The S&P 500 is unwilling to relent from this intense uptrend that we've seen over the past several years. The market has been confined to a consolidation following this recent run-up, and this could open the door for fresh record highs beyond 2400, setting the stage for the next upside extension towards the 2480 area. If we look at the recent low that we saw at 2320 and then the recent record high at 2400, that's an 80-point move between the two, which would mean that a break above 2400 would project gains up towards the 2480 area further up. At the same time, if the market breaks back down below 2320, that would be required to that would force a shift in the structure. But again, only back below 2320 would force a shift in this highly intense uptrend that we've seen in the S&P 500. Gold. So gold has seen some intense setbacks of its own over the past several sessions. But again, when you take it in context and look at the market price action since the market bottomed out in 2016 ahead of 1100, we continue to see these pullbacks, these type of pullbacks happening with the market very well supported, putting in higher lows and then higher highs. And so this latest pullback off the most recent 2017 high around 1295 is expected to once again be supported, ideally in the 1216 area by a Fibonacci retracement level, a 78.6 Fib retracement off the 1195 to 1295 move, but only back below 1195 would really compromise the constructive outlook for gold. So again, while we could see additional setbacks over the coming sessions, the market is expected to once again put in a higher low ahead of a bullish continuation back above 1295, ultimately up into a measured move in the 1335 area and then towards the 1375 2016 high.